back to the O Show, everything crypto every day. On today's episode, we are going to cover exponential moving averages, also known as EMAs. I'm going to show you how to use them for free. Also, please like, subscribe, and comment to help boost my channel. Let's go ahead and get into it. I'm going to disappear from the screen so you guys can see what I'm talking about a little bit more clearly. So the key takeaways to exponential moving averages, you can find out, research on your own, Investopedia.com. It is 100% free. You can find a lot of free information on this website, and you don't have to buy any books or learning materials. Anyways, what is an exponential moving average? It is a type of moving average, which is also denoted as EMA, that places a greater weight and significance on most of the recent data points. The exponential moving average is also referred to the exponential moving average. An exponentially weighted moving average reacts more significantly to recent price changes than an SMA, which is a simple moving averages. That applies an equal weight to all observations in the period. So basically EMAs move faster than SMAs, which are simple moving averages. We want to go ahead and utilize EMAs for crypto. If you want to use an SMA, go ahead, but I like to use EMAs because they move a little bit faster, and crypto markets move faster than other traditional markets. There's different types of EMAs that you can go ahead and use. We'll talk about those in a minute. Next, after you understand what an exponential average is and how powerful they are, they basically allow you to find different areas of support and resistances. You want to go ahead and go to Cointrader.pro. Cointrader.pro is 100% free, and you can go ahead and tap on as many indicators as you want. You can use one indicator, 100 indicators, whatever. It is 100% free. Now let's go ahead and take a look at the Bitcoin chart and use exponential moving averages. After you've found the cryptocurrency or asset that you want to go ahead and trade, you want to first head over to indicators. This is where you can pull up any indicators, but for purposes of this video, we're going to focus on exponential moving averages. You're going to click it. At the top over here, you're just going to write EMA or type EMA in, and you're going to find moving average exponential. I know that it's phrased a little bit differently, but that's just the way that it is. So you're going to go ahead and click it, and you can go ahead and add on an exponential moving averages. Now that we've clicked it, we're going to go to this top little corner here where you're going to see all the different moving averages. It automatically plugs in the EMA 9, which takes the exponential moving average of the last 9 days. And you can go ahead and modify these accordingly. To modify accordingly, you're going to want to head over to settings. Click on settings, and you're going to see the inputs and the style. For the inputs page here, you can go ahead and modify this. I like to use a set of EMAs, which I'm going to cover for you in a minute. But I want to show you how to actually modify them. People like to use different moving averages, exponential moving averages, depending on what they're trading. And sometimes they'll modify, they'll remove, they'll put some on. So again, it's 100% up to you. All you're going to do, for example, you want to use let's say you want to use the 10-day moving average. You're just going to go ahead and type 10 in. You're going to take a look at style. You're going to make sure that the plot, this is going to be the color that your moving average is going to be. For the purposes of this video, we're going to go ahead and click orange. And then as far as the line, you can go ahead and change it accordingly. But we just really just want to use orange. I like to make my lines very, very thick. We're going to go ahead and make it thick. And then we're going to press OK. So this is going to be the 10 moving average that we just added, which is very, very close to the 9 moving average, exponential moving average here. Now that we have removed our exponential moving average 10, let's look at the EMAs that I personally like to use that works for me. I'm going to get rid of MACD. We're not talking about that today. I like to use the EMA 9, which is denoted by the green line. I like to use the EMA 21, denoted by the blue line. EMA 30, which is denoted by the pink line. EMA 50, denoted by the white line. EMA 100, denoted by the purple line. And EMA 200, denoted by the pink line. So the way that we want to use these, we want to utilize them as support and resistance. And that's why I love moving averages so much. Because if you're brand new to trading, you're brand new to investing, you want to kind of get an idea or a range, you can utilize moving averages. So for example, let's say that we want to go ahead and enter along into Bitcoin at about $33,000. we're going to want to go ahead and denote this area over here at the EMA 50 because it's acting as heavy support. So you have your support line drawn for you already just by using an exponential moving average. So what we want to do, let's say you long the bottom here at about 33,000 and you're anticipating Bitcoin to run up to about $46,800. This would be your area of resistance. It is also denoted by the EMA 9. You can go ahead and enter into position based off of this and anticipate price to hit a resistance area here at about 41,000, another resistance area here at about 44.9, and then final resistance at about 46,000 or $47,000, excuse me. Also too, another thing I'm noticing on this particular chart, we talk about trigger areas a lot on my show. A lot of times there's people that are breakout traders. And what that means, that just means looking for an actual, a flip of support or a flip of resistance, turning it into support. In this particular area here, for me to be bullish on Bitcoin, I want to see $46,800 flipped into support. That would be my trigger area. Once that happens, I would go long from there. Again, each scenario is going to be different, but I just want to talk to you about how you can potentially use this. So that would be your trigger area at about 46.8. Vice versa, if you want to go ahead and short Bitcoin, what you would do is you might anticipate that price is going to rocket up to about $47,000, which is this area here at the EMA 9. We're going to denote it. And then what we want to do is we want to go ahead and set our areas to take profit at all these levels here. That's just assuming that we're going to anticipate Bitcoin topping off at $47,000. So you would want to go ahead and take a profit here at the EMA 30 at about 40,800. EMA 50 at 33,397. Down over here at about $24,000, which is also going to be the EMA 100, and then you would anticipate to close your position here at about 15,862. Obviously, this is going to change, and we're also using the weekly chart. A really nice chart time frame you can use is going to be the 4-hour chart. And again, this is going to be a little bit of a different scenario as to how we would use EMAs. And I'm going to show you. The 4-hour chart is absolutely amazing to use to utilize EMAs and trade altcoins. It's just a great time frame. Right now, this is going to be a, we were bearish at one point because we have all of the EMAs stacked like this. A bullish scenario, when we're looking at EMAs, we can find this is a bearish scenario on the weekly. This is bearish is because we have the EMAs pointed downward with a downward tick. When we see that, that is reflecting the current state of the market. Me personally, I like to take a note of this and kind of use these EMAs to denote market sentiment. That might not be the correct textbook way to do it, but we're seeing we saw some bearish price action occur. So right now with these EMAs denoted downward like that, that is going to be a little bit bearish to me. That's why I would need to kind of see some of these levels smashed above about 46 to 47,000 for me to be bullish. Also too, a beautiful example of bullish EMAs would be for them to be stacked from lowest to the highest. For example, but the only difference here is we want to see these EMAs actually straightforward, looking upward, not tilted downward like this. So this chart is bearish. But for a bullish chart, you'd want to see the EMA 9 upward. You'd want to see EMA 21 upward, EMA 30 upward, EMA 50 upward, EMA 100 upward, and EMA 200 upward. Right now the chart looks a little bit bearish to me because we have downward ticks on EMA 9, EMA 21, EMA 30, but overall, this is the type of pattern you want to see for a bullish structure when the EMAs are fully vertical. However, let's take a look back at the 4-hour chart. This 4-hour chart is actually looking a little bit bullish. We're in a current bearish scenario, and the reason why it's bearish is because you have the EMA 200 above all of the lines. Everything is reversed as we looked at the weekly chart. Again, this is the weekly chart here. If these EMAs were upright vertical, it would be considered bullish. The market would be in an uptrend. I would need to see a reversal on those to happen. But at the taking another look back at the 4-hour chart, we went ahead and bear crossed. And what I mean by bear crossing, that is when a larger EMA is above the lower EMAs or the smaller EMAs. That is very bearish. But right now we have the EMA 9 looks super bullish. It's kind of vertical. It's tilted upward. It looks like looks like we bottomed out here at about $33,000. This is where support is, and we're currently balancing and teetering on the EMAs. This is actually looking good. And when I'm talking about support being created, we have a strong area of support created about $37,000. This is where the EMA 21 and the EMA 9 lies. Also too, we're kind of above the EMA 30. So you can even, it doesn't have to be spot on, but you can kind of use this as a range. An area of resistance is going to be $40,000. Another area of resistance is going to be $44,000. Let me go ahead and mark that there. Another area of resistance is going to be the EMA 200 at $48,725. Some people would say, okay, we have a trigger here. We are above support, and we were able to turn this area of $37,000 that was resistance into support, and I want to go ahead and long. So you can go ahead and long utilizing this, but this would be your targets if you're anticipating Bitcoin to go up, and vice versa on our weekly chart, which we just took a look at. If you want to short Bitcoin, you might want to go ahead and take an entry here at 48,000 and then take profits at all these levels all the way down. Thank you guys so much for watching. In closing, I want to let you guys know, use whatever technical analysis works for you. Just because something works for me doesn't mean that it is going to work for you. Also too, a lot of these technical analysis indicators are lagging. Yes, exponential moving averages are math back, and math is very, very accurate. However, we're not just utilizing math when we're trading. We are utilizing market sentiment, emotions, psychology, all different types of things. So it is very, 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 very important to make your own analysis and to use technical analysis tools as actual tools, and do not trade this stuff in absolutes, because if the market reverses, these indicators can also flip as well. They're also lagging, which means they tend to confirm a little bit later than the actual market does. That's just the way it is. And again, no technical analysis tool is 100% accurate. These are basically guides that help us to make better trading decisions. But knowing where support and resistance is and knowing how to utilize exponential moving averages is very, very important, just in my opinion. I hope this video helped you. Thank you guys so much. Have a great rest of your day. Bye-bye.